Cybersecurity is front and center on Capitol Hill today as the House Homeland Security Committee holds a hearing on President Obama's cybersecurity information sharing proposal. Industry expert Susan Axelrod runs regulatory operations for FINRA. Susan, what are regulators doing to stay one step ahead to protect investors regarding cybersecurity?
Well, FINRA in particular has undertaken a number of things to protect investors and to be out there on this issue, which is obviously very important for consumers and investors in the markets. Recently, we put out a report on cybersecurity after engaging in dialogue and doing examinations of a number of broker-dealers. We were also involved in a conference in early February that we put on with SIFMA, and we basically had lots of speakers from the industry and externally on this subject, experts that came in and talked about cyber risks. So it's an important dialogue for FINRA as a regulator to be involved in, but there's a number of important things investors can focus on as well if they're worried about cyber threats and some strong practices.
Let's move back to what's happening on the Hill. Recently, President Obama directed the Department of Labor to move ahead with a proposal that would raise investment advice standards for brokers handling retirement accounts. How prevalent is the practice of moving investors in and out of investments? And do you think more regulation could limit investor choices?
You know, there's more debate that will be had on this subject. Conflicts of interest, particularly as it relates to investing in certain products and the benefits to the broker, have long been a topic of discussion. FINRA is really about an organization that's about investor protection, and a uniform fiduciary standard for broker dealers and investment advisors is something we've talked about as an organization and advocated for. But there's more to come on this dialogue. It's an important issue to raise, and we'll stay tuned.
Is there fear that new regulation is applied differently depending on the regulator?
The new regulation, we'll see what the rules look like and how it gets passed. But I think, depending upon the regulator, FINRA is responsible for broker dealers. That's more of a commission-based business. Investment advisors really look to make a fee off the assets under management that they manage. So there's different business models in the industry. Those models can be appropriate for different customers depending upon their circumstances. If someone's doing a lot of active trading, it may be best to be based in an account where you charge a certain fee rather than a commission by commission per transaction. So it really depends upon the investor, the holistic advice they're looking for, the amount of activity, lots of different factors, but there's not a one-size-fits-all approach for every investor.
And finally, what should investors look out for to ensure that their broker isn't putting them in investments that are benefiting the broker more than their clients?
Well, it's really always important to ask about the fees associated with a particular investment and with their particular account. So you can ask the broker what's the rate of commission or what they may be making off of it. If a broker is pushing proprietary products of that firm, it's always good to say, are there other things I should be considering in addition to that product? Having choice is important, asking questions about fees is important, and transparency in this industry is critical.
Okay, thanks very much, Susan. We appreciate the insight.
Thank you, Jill.
For The Street in New York, I'm Jill Malandrino.